Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So now as we close off the month of April, as we head into May, infrastructure spending, stimulus and inflation, they're beginning to emerge as the three major themes of the post-COVID-19 economic recovery. Last week, many commodities ranging from the metals to energies, they hit multi-year highs, driven by the coming surge in green energy and infrastructure spending. Palladium, iron and lumber prices, they took center stage, surging to all-time record highs, whilst copper and aluminium prices, they hit 10-year highs. Both metals have now doubled from the lows seen a year ago. In a total of 27 commodities, ranging from the metals, the energies, soft commodities, they've all posted double to triple digit gains over the last 12 months, and we're still only at the start of the new commodity super cycle. Crude oil, iron and copper prices are up 265%, 249% and 87% respectively, whilst lumber prices have quadrupled in the past year. And if you compare today's lumber prices to 2020 lows, they're up over 500%. There are plenty of fundamental factors why commodities are on the move, but the key driver is a vaccine-led recovery fueled by massive amounts of global stimulus into green energy and infrastructure projects. This is against a backdrop of tightening supply across many high-in-demand commodities, which indicates that a new super cycle is now firmly underway. The last super cycle that occurred in the 2000s, when China began investing billions of dollars into mega infrastructure projects, which required an abundance of commodities. That sent prices surging to record highs. And now in 2021, it's America's turn to step up with President Biden's Build Back Better plan to transform the US landscape and economy. President Joe Biden's ambitious multi-trillion-dollar green energy and infrastructure spending plan will involve pumping hundreds of billions of dollars into improving the nation's aging roads, bridges, schools, railways, waterways, airports, cellular network, as well as building a national network of 500,000 electrical vehicle charging stations by 2030. All of this ultimately points to one thing: the US is going to need more commodities and lots of them. Joe Biden's Build Back Better plan is expected to spur the nation's biggest ever buying spree in commodities. That further suggests that we could be on the verge of a multi-year super cycle as demand continues to outstrip supply over the next few years. Whichever way you look at it, the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. Looking ahead to next week, the biggest market moving events that you need to be aware of include the following. We have ISM manufacturing PMI data, ADP employment change and jobless claims, as well as the biggest event of the week, which will be Friday's non-farm payroll data. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. Firstly, we're going to move over to the dollar index. Now, this is a market we pointed out to you last week during both gold and silver asset of the day that you wanted to watch out for end of month rebalancing of portfolios as traders take their profit off the table. Bear in mind that many commodities are broken out to 10-year highs, and this is very common to see capital then flow into the dollar. We also had contract settlement on the metals last week as well. So we've seen into Friday's close, the dollar pick up momentum. We've actually established 5 positions on the dollar over the last week. Into Friday's close, ourselves and our members, we're in profit across all of our dollar long positions. Not only that, but we took the opportunity on energies on the spike last week to bank over 900 points profit. So for every one lot that you would be trading, that's $9,000 of profit. For every 10 lots that you'll be trading, that's $90,000 of profit, which has been a great market over the last month. Now, moving back to the dollar here, you should be aware that as we go into Monday, we have a bank holiday in the UK and Europe, and also China are going to be on their Labor Day holidays until Wednesday. So this thinner liquidity can create exaggerated moves in the market. Also, typically the dollar tends to be stronger as you move into the beginning of May. We've already, of course, seen this with the rebalancing of portfolios right at the end of the month. Again, very last trading day of the month on Friday, the 30th of April, capital will often flow into the dollar. Hence, we've been building positions on the dollar over the last few days, which have all moved into profit into Friday's close. So the expectation here is with the dollar breakout that we've seen and the possible increase in capital moving into the dollar as we head into the first week of May, this could create an environment where you do see some initial selling pressure on some commodities that we track, which ultimately I'm looking at that as providing buy opportunities. So first of all, let's move over to silver here. So silver into the close, trading at $25.85. Many of you who follow us at the Gold and Silver Club will know that we've been building positions between $24 to $25 per ounce on this market. We discussed that at the beginning of April, where we were building those positions, and gold as well, where we identified with you great buying opportunities between 1680 to 1700. What we've seen over the last few days is an absolute classic move here with the metals in particular, where we told you that many traders out there started to get their late confirmations, and this is where they started to buy in, particularly with gold here on the breakout that we saw last week. The FOMC statement was faded, which also happened on the European Central Bank, where you get a breakout on the actual day of the European Central Bank announcement or the FOMC statement, and the following day that move gets faded, and we've seen that on Thursday, the sell-off on gold, and Friday's pressure to the downside as well. We discussed with you last week that many technical traders would then get their delayed confirmations. They would start getting long, getting FOMO as the price neared towards 1800. We have been establishing positions since the beginning of the month, capitalizing on this large breakout to the upside on gold. We've been nice and early to this trade, where by the time many traders out there, retail and technical traders, are getting their final confirmation to go long, we're already banking our profits and squaring out our trade. This is where we've seen this usual FOMO come back in to gold just as it's about to tank at the end of the month with the rebalancing of portfolios and as you go into the first week of May here as well. So as you can imagine, our expectation is if the dollar does its normal strength at the beginning of next week, which would be typical going into May. It may not be immediately at the beginning of the week, but normally over the first week of May, the dollar can pick up momentum, which would make sense given the breakout on Friday. This may put some downward pressure initially on the metals. And again, I'm just looking at dips as buy opportunities over the month of May here on the metals to capitalize on other cycles that we have as we go into the summer here as well. So really that's what I'm looking at, particularly on silver as well. Silver also getting, of course, the industrial bid here as well, and the big movement towards infrastructure spending, green energy and electric vehicle utilization as well. So with that, we do want to be a buyer on silver on dips. Again, we've been nice and early here to our silver trades, building our positions at the beginning of April here. So we're in a very strong position where we protected those trades. And now I'm looking to add further exposure on silver throughout the month of May. Again, adding on dips. So really any significant sell-offs that we see, we're going to be a buyer on silver. Now, it could be that we don't get that much of a big correction as we go into May here, but we are looking out for any moves really back towards the swing lows that we saw back in the middle of April here. We would see those as good opportunities to add into trades here. So if we were to get a revisit back towards the mid-April lows, for example, this would be a level that I would be looking at to re-establish and add to our overall position. Again, copper has been a great market for us, broke out to 10-year highs last week. We still have 2 positions on this market. Platinum as well, it's been quite range bound lately. Normally platinum sells off as you go into the beginning of May. If this comes under pressure, I would keep an eye on this, because if platinum starts to break down and happens to break below its swing lows from the middle of April here, this is where you could see gold and silver follow suit as well and also be under pressure. I would not be surprised at all to see some short-term pressure to the downside here on the metals, but the reason I want to highlight this to you is that this could provide a really nice opportunity for you to get in as the market is panicking, right? So the majority of the time when traders are panic selling out of their positions, that's the best time for you to stack and accumulate into trades. And when traders are getting their delayed old technical confirmation finally telling them to buy, it's normally the end of the move and when you want to be actually banking your profits, as we've been doing over the last week here. So again, I would look at dips as opportunities to add really across the board here, very much so on gold, but also on silver. As we head into a new week, I would definitely keep an eye on the dollar here. You can even keep an eye on the miners here, such as GDX, which is showing you also the weakness that we're seeing into metals at the end of the month. Again, this is very common, and you may see a bit more downward price action as we go into the first week of May here as well. So I would just have that on your radar as we go into next week. That's really what you want to keep a very close eye on, particularly with China on their public holiday until Wednesday. Now, this again is where you want to be utilizing a professional approach to the market. market. You do not want to be utilizing old, outdated technical analysis strategies, which are used by many retail traders where they're taught incorrectly to get their delayed confirmation into trades, and they're often getting faded in the market, which means just as they're buying, the market is about to tank, and just as they're panic selling out of their positions, you see a complete turnaround, but they keep getting chopped up in the market. You want to make sure that you're utilizing a lot more data and intelligence than that, so that you know your decision process is being dictated by statistics, facts in the market, data, market intelligence. You also want to know exactly what the hedge funds, money managers, banks and institutions are doing in the market, how they're positioned. Alongside that, understand key areas of liquidity. It's just as important to know when to bank your profits as it is to get into your trades as well. Many traders really struggle with trade management and when to bank their profits. They end up giving back a lot of profits in the market. Alongside that, you want to know the intermarket correlations, the ratios in the market, understand macroeconomics, and also the seasonal playbook. So the key catalysts for commodities over the year that will be responsible for huge moves, and that will help you massively when you trade commodities and really give you the edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You have access to our real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.